Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within company filings, and no, we're not going to let this one be a drag. Today we are diving into an interesting report from Worksport Ltd, a company that makes truck bed covers and accessories, and this filing tells a story of rapid growth but also what it takes to achieve it. The big news here is that Workport is shouting about a massive 61% revenue growth and a 31% profit margin in their third quarter of 2025. That sounds incredible, right? Imagine your business suddenly bringing in almost 2/3 more money than it did last year and keeping more than 1/3 of it as pure profit. They are even saying they are set up for profitability in 2026 with a goal of over $45 million in revenue. This is the kind of language that excites investors. It means the company is not just growing, it is becoming more efficient and plans to keep that trend going strong. Now, who are we talking about here? Workport Ltd is registered in Nevada. Their main trading symbol is WKSP on the Nasdaq stock market LLC. This means they are a publicly traded company, and like any public company, they have to report their performance regularly to make sure everyone knows what is going on. The most important thing here is their common stock, the shares that most people think about when they buy into a company. Right now, they are trading on Nasdaq, and this report is all about how the company is performing financially. This report is primarily based on a press release they put out. Think of it like the company's official announcement of its performance. This press release is what they are filing with the SEC, the Securities and Exchange Commission, which is like the government's watchdog agency for companies. Let's zoom in on those numbers. 61% revenue growth. If last year they made, let's say, $100, this year they are making $161. That is a huge leap. And a 31% margin means that for every $100 of sales, they are keeping $31 as profit after paying all their costs. That is a very healthy profit margin for most industries, especially in manufacturing. The projection for 2026 revenue being over $45 million sets a clear target. If their current growth rate continues, this is not an unreasonable goal. It signals ambition and a strategic plan to scale up their operations to meet that demand. Looking at the larger picture, Workport is telling us they are on a strong upward trajectory. They are not just selling more, they are selling smarter and making more money on each sale. This is the kind of financial health that attracts attention, and it aligns with their strategy to become a more profitable company. Now let's look at this from a slightly different angle. When a company reports such strong growth numbers, it's important to ask why. Are they gaining market share? Are they increasing prices? Are their new products really taking off? This report through the press release suggests it's a combination of factors leading to this impressive performance. The fact that they mention positioning for 2026 profitability is a key indicator. They are not just celebrating a good quarter, they are signaling confidence in their long-term strategy. This kind of forward-looking statement can influence how investors perceive the company's stability and future potential. In essence, Workport is painting a picture of a company that is executing well. They have a product that is in demand, and they are managing their business efficiently enough to turn those sales into solid profits. This is exactly the kind of information investors want to see when evaluating a company's health and its prospects for growth. It shows a company that is not just surviving but thriving. So what is my take on Workport's latest filing? The numbers for revenue growth and profit margin are undeniably strong. A 61% revenue increase is significant in any market, and a 31% profit margin suggests excellent cost control or strong pricing power, or both. The forward-looking statement about 2026 profitability provides a positive outlook and signals that management is focused on sustainable growth rather than just short-term gains. The main strength here is clearly their financial performance and their clear articulation of a growth strategy. They are demonstrating they can sell more and keep more from each sale. This is a powerful combination. The primary risk, as always with rapidly growing companies, is maintaining that growth and profitability as they scale. Can they keep up the operational efficiency as they get bigger? Can they continue to innovate and expand their market reach without their costs spiraling? In conclusion, Workport Ltd is presenting a compelling case for its current success and future potential. The reported figures are impressive, and the strategic focus on profitability is a positive sign. While the inherent risks of rapid expansion are always present, Workport appears to be navigating these challenges effectively, judging by this filing. Alright, that is our breakdown of Workport's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.